Hi, how's it going? Welcome to a new stock market Q&A session. As you know, this is the show we do midweek to talk about what we're all passionate about, stocks, the stock market, and markets in general. And today we have Miguel Paz with us. Miguel, how are you? How are you doing?
Very well, Antonio. Honestly, seeing the rise in the model portfolio, I think the first question is almost mandatory when you see it. I'm kind of tied hand and foot for that question, so I'm really happy.
Well, seeing that, hey, as they say, both because it concerns you and because it excites you, since the model portfolio, as we said in the last Q&A, was at all-time highs. And I think with today's rise, one of the positions we all know, I don't think we're revealing anything by saying STS. We're also hitting new highs, we could say.
Yes, in fact, our goal every year is the same, simply to achieve a positive return, that's a given, in the double digits and to beat any index. And the return in euros this year already exceeds 25% by a good margin, so we're getting more than 25%, which is not bad at all. And considering that we've already had 2 years of strong outperformance, in the end, as we always say, beating the indexes as a retail investor is possible. The only thing you need, obviously, is rigor, information, discipline, and a method, what we try to convey, and yes, it can be done, as they say. So, very happy. As Miguel said, the model portfolio isn't our only goal, not by a long shot. Our idea is to educate, ultimately to provide information, tools. But when it turns out like this and everyone benefits, that's even better, of course. So, very happy.
We're talking about the WWS Financial Research Service, which many of you are joining on the channel. The channel has grown a lot recently, so welcome to all newcomers. Today, as we've done for weeks, we'll do a show that's become a classic in our lineup. It's on Wednesdays or Thursdays, depending on our schedule, but always during the week we do a stock market Q&A session. It's a Q&A session where you can already start leaving your questions, whether you're following us on Twitch, watching the live stream on Twitter or on YouTube, about how we see certain companies, sectors, and so on. While we get things started, there are already some questions coming in through the chat. First, a comment. Let's call it a service announcement. As you already know, today we'll be sharing various screens from the investing partner platform by Locos the Wall Street, which is one of the top reference platforms. With the code and link in the description, you'll get a 15% discount to subscribe to Investing Pro, which are the screens we're about to show you now. I'll also share a QR code with you, a discount that's always in addition to the best price you can find on the platform. The code is very simple, L. Well, as you leave your questions in the chat, as I was saying, a piece of news has also come up that some might say is more financial or political, but in the end, it's news that can have, and in fact, already had yesterday, a hint of impact on the markets. It's this shutdown of the US government, which we see periodically. It's a bit like Groundhog Day with the debt ceiling, with the spending, whether it goes through or not. We already know that the US economy is a very indebted economy, and in fact, this has affected many government employees. Contracts can't be renewed. Tell us, how is this affecting the Trump administration? And above all, could there be a possible spillover or contagion to the markets?
Honestly, I don't think it's all that significant. Much importance has been given to it, and yes, it caused a stir, especially yesterday, but it's not as big a deal as when we talked about the debt ceiling, etc. Because ultimately, what you must understand is they operate very similarly to Spain. You have a budget that you approve, and when you don't approve it, there's an automatic extension, so it keeps getting extended. But the thing is, these extensions also have a limit. You can't just keep extending them for 30 years. That limit was September 30th, which was this week, just a couple of days ago, and they didn't reach an agreement. Why? Because even though the Republicans agreed to renew these budgets, etc., in other words, to grant the extension, they didn't just want an extension, but rather new budgets for certain items, and that's what causes the most friction. So it's also used as a negotiation tactic because you have to keep in mind that it's not like the country is at a standstill right now. The important officials, and by important, I don't mean to diminish anyone, but I'm referring to the military, medical staff, police, firefighters, all the essential services, even the IRS, which for them is obviously an essential service, all of that keeps running. It's just that other, more secondary agencies, like monuments, museums, well, obviously, as I said, I don't want to downplay anyone's role, but those that aren't critical to the country's functioning, so it's not as serious as when it comes to the debt ceiling. If you can't take on more debt, then you really have a big problem because all the expenses that depend on that, and that includes even medical, pensions, whatever is needed, just can't go through. That's not the case here, and even the current estimates are that this will last a week, 9 days, etc., just a bit of pressure so that they end up giving in and passing the budget items they want. Why is this important for us, or why are we highlighting it as well? Well, look, one of the sections that needs to be renewed is the one that ensures certain subsidies for insurance companies, and that's very relevant because if it's renewed and done through the budget, let me share my screen because I think it'll be clearer, as you were saying. Well, here we are. Well, this is for, this is from Investing Pro, which is what we use. And you can see, for example, that UnitedHealth and other insurance companies have dropped a lot. And part of that is also due to the uncertainty around some government supplements. The government pays for part of the treatments, so aside from the specific problems UnitedHealth has had, if these are renewed, these insurers, and here we see UnitedHealth, as I said, Oscar Health, there are others, Centene, etc., they would benefit a lot and we would probably see a bid rally. So, well, there are opportunities that are tied to this renewal of budgets and the current situation rolling over.
Perfect, Albert. So hey, let me take this chance. There are already questions in the chat, but we're talking about politics, and I know that's also a topic people are interested in. The other day, I was talking about it in the Sanhedrin. How do you see the situation in Argentina? I've been hearing comments from people who are actually from there, saying that the situation could get more complicated for Milei. He's getting caught up in corruption cases. There are a lot of people who used to live off subsidies and aid, who voted for Milei in the last elections because of the country's situation. But in the end, they've realized that for them, things are actually even worse. Selfishly, it's much worse for them because they've been left without help, without subsidies. And those polls that seem to predict a clear victory in the upcoming elections now don't look like they're going to turn out that way. They're being called into question. How do you see it as well?
Well, here we need to distinguish between two things. You know that the election is coming up this month, on the 26th, and part of Congress will be renewed, just so we're clear, and Milei's party is only defending 3 seats. So Milei is definitely going to gain more seats than he currently has, that's 100% certain. Yes, that's a certainty, and no one is questioning it. The thing is, it's not enough just to gain compared to the previous result. Here, the first thing to consider is whether you're going to get more than the others. In other words, if you're going to win. And second, whether you're going to have a majority. Okay, having a majority, I see that as impossible. They're not going to have a majority, not for now. Earlier this year, there were chances it could happen, which would be the most bullish scenario, as they could govern as they wished, without vetoes, governing as they pleased. The second thing is whether they'll win the elections, meaning not just add more than the 3 they already have, but win. And here I would also say that it's very likely we'll see a yes, according to the odds. You know that we use both political polls, right? And here we have AAS, Intel, etc., as well as other services like Polyarchit. Okay, I want to share with you, hold on, because you'll see what I'm talking about. The first one is this: which party is going to win the most seats in these elections? At the beginning of the year, we saw that La Libertad Avanza basically had it in the bag, let's say, with about an 80% chance of winning the elections, and at one point this even reached almost 90%. Then the corruption scandal started. Like you said, the one involving his sister reached 90%, the one with Karina, and then came the big debacle in the Buenos Aires elections, where a much better result was expected from Milei than what he actually got, and the Peronists really showed a lot more strength there. While Buenos Aires, due to its unique provincial Peronist leanings, is prone to Peronism and could never win provincially, the margin by which he lost scared the market. In fact, it dropped to 56%. It wasn't clear it was the leading party. Lately, after the economic measures that have been taken, they've been gaining much more support in the provinces, and that's made them bounce back. Right now, they have a 70% probability of being the party that wins the most seats in these elections. And then there's the other thing I was telling you about, which is, okay, they're the ones who are going to win, but who will have the most seats after the elections? And here, it's almost certain that it will be Unión por la Patria. Okay, so depending on their winning margin, that determines the market reaction. This is already discounted. It's impossible for them to win. There was only one time this year they had a chance to be ahead, but that's not what changed. Prices of banks, for example, were at 56.0, and it was known La Libertad Avanza wouldn't have the most seats. Since April, May, it was known this wouldn't happen. The difference is with the other election, if at least they win the elections, and especially by how much they win.
Unión por la Patria. For those who aren't very familiar with Argentina, how would we categorize it?
Well, it's basically what was there before, let's say. This is Peronist, Val, so this would mean going back to Kirchnerism, Axel Kicillof, who is the one who just won in Buenos Aires, etc. So it would be a regression. It would be what the market would take the worst, let's say.
All right then, guys, what do you think if we start with the questions? We already have quite a few lined up here that you've sent us. And even though it wasn't the first question to come in, I think it's to, let's say, break the trend we've been talking about, which is related to Argentina in a tangential way, as you know, but in the end it seems to be affected. Miguel Ortiz, Golar still isn't taking off. Even today, when I checked earlier, it was down by about 2% or so. I don't know if it's recovered.
Here, down 187.
All right.
There are several issues here. Well, the first one is obviously Argentina, as you said, just to tie things together or connect the argument a bit, and it's that since the two new contracts that are about to start operating are in Argentina, the question is, hey, what if the Peronists actually come into power? Are they going to keep these contracts? Aren't they being called into question, etc.? All precedents, even with YPF, from a previous operator with the Peronists, show contracts will be upheld. If not, they'll receive compensation, secured to be payable in dollars, arbitrable in international courts. So they'd get compensation and could redeploy the ship. That's the worst case. Not the base case, not even if Milei loses. The contracts are already protected, and everyone is interested in revenue, foreign currency flow, and government taxes, as seen with Petrobras. So I see this as protected here. Not only that, But since it's maritime infrastructure, that's what's interesting, because in less stable countries, like in Africa or like Argentina, if MAI.V didn't win, you can just take it with you and that's it. The asset isn't tied to land-based infrastructure, a fixed asset like an apartment. If you leave, you can go with your wallet, but if you take an apartment with you, that's a problem. That's the tangential problem. But the main reason this isn't going up and people are losing interest is that it seems like we live in a world where only the latest news matters, the most recent thing, the shiny object, etc. So, in that kind of market, when your cash flows are only going to start coming in 2 years from now, nobody cares. People lose interest and this goes dripping downward. How can this be broken? Well, if there's a surge in the underlying commodities, the sentiment would change. And then if they announce a new contract, a new shipbuilding project, which is what I see as most likely, either at the end of this year or the beginning of next year, it's likely we'll see something along those lines, and that would speed things up. Anyway, I see the downside as pretty limited. In the end, sentiment can drag it down, but the fundamentals are what really matter. Antonio options.
Yes, yes, sorry for interrupting you. I was sharing something here.
Wow.
Exactly, hey, just what you were saying, right? I think that everyone who knows a bit about Golar, the usual suspects, if you'll allow me the term, like Edgar, Gabriel, everyone basically shares that view of the downside, because in the end you have contracts with very secure payments, and so on, and so forth. So, on days like this with drops, days with a bit of volatility that's really driven by not much actual news, well, these can be good opportunities for selling puts for those who haven't taken a position yet and think, well, I can still get in with an even bigger margin of safety. Take a look here. A put sale for November, which is 50 days out, strike 30, and you'd collect $122. In other words, it's really as if you were buying at a little over 35. Hey, we've just recently seen the stock at a little over 35 and almost at 45 when the contracts and everything else were confirmed. And even at 45, many of those following it said it could still be a good deal. So, well, I'll leave it here. It's a pretty simple strategy. But maybe for many of you, hey, it could be worth it. As always, this is not a recommendation of any kind. All right, Miguel, let's keep going.
Albert, speaking of the United States, if you remember last week, there was news about Trump and the whole stablecoin issue, and here's Joan. By the way, congrats to him because he asked the question at 2 in the afternoon, and while I was preparing for the Q&A, I saw it. He says, "Hi, what are the best vehicles to invest in stablecoins? What are their advantages compared to other assets, and why should someone consider having them in their portfolio?"
Well, I'd say that investing in stablecoins isn't really interesting. The name stablecoin already tells you that this is an asset whose value is supposed to be stable. The point of stablecoins is really about what you can use them for. For example, let's talk about Tether, just to name one. Tether is an asset that, in theory, has its value pegged or tied to the dollar. That token is always supposed to be worth $1. So, you can't really invest in that. Well, it would be like investing in dollars. I mean, for example, if you live in, say, Nigeria, right? Well, in that case, it might be interesting because it's a way to save, etc. But it's not interesting as an investment per se, because it's just buying a currency. It's a forex operation. So, what's the point of stable coins? Well, it's being able to tokenize assets and trade here, especially for some jurisdictions that don't have free access. For example, Argentina before MAI.V., etc., being able to invest in dollars or get liquidity out of here, and so on. So there are some yields you can get from staking, and so on. In other words, it's an asset that's interesting as a means to something else. So the boom we're seeing with stable coins is interesting, especially as a counterpoint to central bank digital currencies. So you can benefit from many companies in the crypto ecosystem that rely on the growth and explosion of this stable coin and what it means for liquidity, but it's not really an investment per se, because in the end, what they usually do is have a peg, that is, a direct link or relationship to a specific value like the dollar, the euro, or whatever it's referencing.
This question from Alvaro is good, especially regarding Golar. Many are just getting to know it, or already do. If you're a research subscriber, you know it well. He talks about valuation with respect to 2025 EBITDA, but that might not be the best metric depending on when they actually start earning and generating cash. Right, Albert?
No, exactly. The problem is right now it has had two assets operating, but next year there will only be one. So if you only look at that EBITDA, it's not going to be useful. When all three are up and running, then yes. So normally, in fact, we have a valuation in addition to the ones we do in research on the main locals to Wall Street channel before the announcement of these contracts and before we knew about them, also with Carlos Mora on our locals channel, which you can watch. And there you can see that you really have to start discounting from the moment they begin to generate. So you should look at it with the 2028 EBITDA at least.
All right. Let's go with another one, Miguel. Let's start picking some.
Seeing the trend, the Spanish stock market just keeps going. And here they're asking if you have any opinion on EBROM, the car company.
No, and there are a lot of things I like right now about the Spanish stock market. I'm looking at quite a few. You know, we have a WWS financial watch list. I like some, but not EBRM. Miguel or Antonio, your opinion?
But Ebron is a typical car company, or more like CIE and other component makers. Al, if you have it there, pull it up and let's see what it tells us. Let's see what investing has to say about it.
I was also looking at it on investing, and I think it's an engine manufacturer. It's small, about 400 million in market cap.
Yeah, we'll ask the AI, the Warn AI. You know, we use it precisely for this kind of thing. Look, wait, it just gave me another one. Send me the ticker, that's better.
Yeah, it's EBROM, with an M at the end, just like you wrote it, but with AH-BM.
And the name?
EBROM Motors.
Just like that, right?
Yeah, well, EV Motors, I think.
Okay. If you want to comment.
Yeah, if you want. Well, actually, we had another one from the Spanish stock market that Juan Quesada was also talking about.
Juan, you haven't checked this one, have you?
We're going to.
Scold you. Just kidding. He talked about it at length. Yeah, now.
In the meantime, if you want to look it up, Miguel, I'll start putting up the info about PUIG, and that way we can split it out. So look, in the case of PUIG, this one really seems interesting to me. Okay. You already know it's a company that they mainly focus on perfumery, but also on skincare and makeup, especially with the Charlotte Tilbury brand, which has makeup. It's a Spanish semi-luxury company. You know, it's not exactly high luxury like some perfumes, but it's a product that has a lot of similarities to that. It went public very recently, so there's very little stock market history. Everything you see here comes from the prospectus, all these previous financial statements. The company is required to report trends from before, even if it goes public later, so that investors can get a sense of its progress. So it's a company that's ended up being quite cheap. If we look here, for example, at EPS, it generated $1 of profit. Sorry, €1. So right now, we have a PE of 14, a little less, but this year it's going to grow mid-single digits, like 5 or 7%, etc. And looking further ahead, because it's been a challenge for them, the brands they operate, which are ultra luxury, you probably know them, right? Well, Jean Paul Gaultier, etc., in fragrances, Charlotte Tilbury that I mentioned, Dr. Barbara Stern in the skincare segment. They have really, really good brands with high margins, but in true luxury, these are usually brands that take time to develop. What you want is not to exploit them all at once, but to work on them gradually, little by little. So for me, PUIG is one of the highest quality companies here, and yet in terms of valuation, it's much cheaper than others. Let's see if I can pull up the right comparables I want to show you, which are Estée Lauder, L'Oreal, Interparfums, and the Shiseido segment, D, even though this is just the skincare segment, and so on. And if we look, for example, at valuation, let's keep it simple, nothing too complicated, right? But just looking at the P/E ratio, we see it's at 12 times compared to Interparfums, which is a comparable at 17 times, and the Shiseido segment as well. We could also compare, although here the P/E isn't as relevant because of accounting reasons, and then there are others of higher quality like L'Oreal, which obviously the market gives a premium, right? But if we simply look at it alongside its peers and assume a mean reversion, that it goes back to that valuation, we'd be talking about 24 to 25 euros. It's true that it's always going to have a discount, let's say 15%, etc., because it's a family-owned company and the family controls the voting rights, since two types of shares were issued, A and B, and even though they don't have the majority in the B shares, they do in the voting shares. So that's always going to give you a discount, just like with holding companies, but it's a very high quality company and at a pretty attractive price.
Albert, I wanted to ask you a question because I'm starting to dive into reading about the company, and this is a personal question in case it's useful for any followers. I know that in this industry, luxury really values the management team having a track record of doing M&A, especially to consolidate certain small markets. And do you think this company will focus on that, on further consolidating the market with the family behind it, or is it in some way set up so that a big player can buy it?
It's very unlikely that they'll sell precisely because of this family tradition and the fact that they have the voting power to refuse and so on. So I think they will keep adding more brands just like they've done so far, but they're pretty selective. They don't mind paying more because they believe in creating long-term value with these brands, and that luxury isn't a short-term story. So, when it comes to acquisitions, I don't think they're your typical serial acquirer or roller, not at all, because they're careful with what they take on. But I do see a lot of growth potential, especially in the skincare and makeup segments. Okay, Charlotte Tilbury, even though it's a giant in the UK and so on, still has a long way to go, and they make a lot of niche acquisitions. So I think this is going to continue, or at least I see it as very likely that it will, but I also don't see them suddenly starting to do roll-ups or launching a big wave of acquisitions. And I don't see them as a target for being acquired either, given their family tradition, so to speak, and the shares that have veto rights.
Well, look, EBROM Motors is indeed a company that manufactures electric cars and it's based in Barcelona. Albert, it's right next to you. I do know about it.
I don't like electric cars, you know. I'm against them, so I don't know it, Antonio.
That's true, that's true. Well, look, here you have it. And you can even ask it to make a comparison with other electric car brands. Look, would you like to see how the market share evolves compared to other electric cars made in Europe? Well, we say yes, and it does it for you. Honestly, I didn't know about it, but I think it's interesting at least that, hey, we're in the mix. And here you can see what it generates now. That's it. We don't really know it either. So let's move on to stocks where we can actually add value for you. Look, for example, in this case, it says, "Hi Albert, am I confused or is DynaCore trading at 3 times enterprise value and would be trading at 1 time enterprise value in 2030? Roel is asking us.
I don't know the exact figure, I'd have to check, but it sounds about right. It fits a lot. It's really, really, really cheap. Obviously, it has some risks, especially jurisdictional, operational. We already know it. No company is exempt, but it's very cheap, and especially if they follow through with the expansion, it's at about 1 times EV/EBITDA, as you said, because of all the cash they have, which lowers the market cap. But even if we just look at the stock price, it's very cheap. It shouldn't be more than 5 times, 6 times at most.
Albert, here Jazra is also asking what happened today with gold and silver. They dropped vertically in just a few minutes.
Well, I missed that.
Well, it seems more technical than anything else. In what sense? They were going up vertically. Gold went from 3,600 to 3,900 in a week. 3,850.40. Nothing significant, but nothing goes up in straight line. We talk about this, and it seems more technical than fundamental. There's no news. It's not like there's been a resolution of uncertainty, some geopolitical solution, which can be triggers for this, and even less so, because if you look at other commodities like copper and platinum, they've all dropped in sync. So it seems more like a technical thing than a fundamental one.
Well, speaking of other commodities, there are a lot of questions about commodities. In fact, there are 2 specifically about oil. I'm going to ask you first about oil as a commodity, rather than getting into companies, which is, Cesar Garcia says oil is tanking. Will it drop to 50? Do you really think the Americans will let it drop to these prices? I don't think they're the most expensive producers in the world, to be honest.
They may not be the most expensive, but they lose money at those prices. It's unsustainable. Not everyone. Of course, some basins operate better, but as a whole, American shale loses money at 50. So it's not sustainable because supply would drop significantly. We're not even talking about growth, just maintaining current levels, and capex isn't sustainable. It could go down, obviously when there's an imbalance, and right now we're probably in a slight surplus and a structure not very constructive for oil. So prices could drop and take a hit down to 50, but that's not a sustainable price and they lose money at that level.
The other thing I was telling you about, related to specific stocks today, is Oscar asking about Kosmos. What do you think about Kosmos? Acquisitions are discussed, but I don't know if it's about being bought. Acquiring TUI.
Well, I think it's good. In fact, I thought it was going to go up quite a bit this week. They also announced the refinancing of, well, actually no, but implicitly yes, regarding the bond that was due in 2026, and now its maturities are in 2027 and so on, but it eliminates the need to raise capital, etc. In the short term, no, because now you have next year's maturity covered, which is very positive, and I expected the market to react much better to that news. The weakness of oil, as we're seeing, is dragging things down. I'm actually quite positive, and it's hard for them to acquire your low in this environment. In the end, they just don't have the muscle to do it right now. Eventually, it's an option. In fact, you know that not too long ago, 6 months or a little more, but right now I see it as difficult. It's easier for them to become an acquisition target themselves. The thing is, it's a bit of a specific structure, right? By country, by division, the retirement part, etc. But I still think it's more likely they'll be the target of a buyout than that they'll do it themselves right now.
Albert Eduardo mentions this is what Javier Chico discussed in the last roundtable.
Same? No, I don't think so.
Minera Alamos, which Javier mentioned. I know there was one that was called very similar.
Oh yeah, sorry. Yes, I'm with you. Counting on Amos to score.
Let's go for it already.
You're right. That's why. Are you Albert's brother? Like someone said in a comment here. I found it really funny. They're asking if you guys are brothers. Miguel, Albert, are you brothers? You could be.
Che says, crazy guy with glasses. So I came in. Antonio took off glasses.
Is that a sign?
Albert, or do we have an opinion on Minera Alamos?
Did you see Sanhedrin, Albert? Did you see Jaws part? Interesting.
That's for sure, no doubt about it. And besides, he really knows his stuff. But I didn't have any more opinions beyond that, so I can't add anything else about that topic. I don't know, Antonio, since you talked to him more, maybe, etc.
He's very bullish. Honestly, Sanhedrin was really good for the commodity funds because, well, Javier answered a lot of questions and so on. In fact, he also talked about one that later became news, NKO, the ticker from Mako mining, which made headlines this week and so on. That one I do.
No, well,
Yes. And what do you think?
about that one. I love it because it's a company making acquisitions without dilution. I like the CEO. And honestly, it's a bit complicated to follow the deals they make, because if you've seen the structure of the most recent one with Celestify, it's even hard to understand because of the agreements they later reached with them and so on. So, over 3 years and all that, but I love it. They're taking advantage of the market, growing, and yes, the market recognizes it too. The only thing that worries me is that they might have too many spinning plates, too many fronts open at the same time, because they have a lot of jurisdictions, assets, and so on. So, well, hopefully they execute well, but that's a risk I definitely see.
All right, we were discussing commodities, and Alex Trepat says he's positioned with a nuclear ETF and uranium from this year. How do you see the sector for late 2025 and 2026?
Do you want to say something, Antonio? You?
No, go ahead. You can comment at the end if you want.
Talk in the meantime, because I want to share a chart if I can find it in a moment. Okay.
What it is, as we always say with uranium is a commodity that's hard to track because the only thing we have, the only, let's say, reference point we can follow is the spot price, which is going up. It's going up. I think right now it's already surpassed $80 per pound. But that's not really what moves the needle in the market. Because the big majors, the big utilities, what they do is sign long-term contracts. I'm really liking the path uranium is taking because it's following a trajectory that's not making headlines. It's not catching the attention of the mainstream public since it's not making a vertical jump, but it's been a very prolonged rise. And well, we've talked a lot about uranium. In the end, uranium was a supply-side thesis, but it's turned into a demand-side thesis. And also, well, we're seeing, as we are in other sectors, that mining isn't as simple as just surveying how much is underground and how much can be mined. And you know, companies, businesses, when they see the price is attractive, can't just hit a button and start mining. We're even seeing Kazatomprom, which is a real powerhouse when it comes to extracting uranium from underground, facing a lot of difficulties. Their production keeps dropping, and they're doing something very interesting for a company that's the undisputed leader. They're implementing a price restriction policy. Let's call it that. They call it. The right term isn't coming to me. It's not rigidity, but I'm sure I'll remember it later, where basically they prefer not to flood the market with supply so the price doesn't drop. In the end, Like I was saying, mining isn't that easy. And now we're seeing all the data centers, everything that artificial intelligence needs, and how everything is shifting toward nuclear energy. Albert, here you're showing us, if I'm not mistaken, Sput the Pac-Man, right?
Yeah, in the end, this is one of the most interesting developments because, well, it's a physical trust vehicle that basically raises money, uses that to buy uranium, and when it's listed, it allows for more shares, buys more uranium, and so on in the spot market. So what that does is drive up the price because obviously you're taking supply off the market. So when this new bullish cycle started around the beginning or middle of September, we can see here how this, which was trading at quite a discount to NAV, started trading at a premium and began issuing shares. In this table, what we see are the purchases of pounds of uranium they make, the shares they issue, and the cash they have on hand. So we can see that in the week from the 8th to the 12th, they bought 100,000 pounds. All right, so in the week from the 15th to the 19th, they bought 950,000 pounds. And in the week from the 22nd to the 26th, 2 million pounds. And in this one, they've already bought 400,000 pounds while continuing to fill up their cash reserves. So it enters a virtuous cycle. I recommend following this closely and in detail. We already do this in our research because it can give you a lot of information about how prices might behave. So my view is that we're going to see the price of uranium at the end of this cycle at least surpassing the previous highs, which were at 140. And then the only thing you need to know is who is going to benefit from this. Like,
Albert Farrow mentions that COR Natural Resource and POTI seem to be among the big winners from the high electricity demand of AI data centers. What do you think?
well, I think you have to be very, very cautious with US coal, okay? Because we see here, for example, in the case of Peabody, which is up another 1.68% today, right? Due to the increase in liquidity, especially the rhetorical government support for the coal industry, and the fact that the US government is backing materials it considers more strategic, taking stakes in mining companies, etc., the whole sector has surged a lot. We can see here how it went from 14 to over 28, right? This is almost its all-time high. We can see here the peak when coal was at 400, right? And now coal is at 100 Newcastle, right? Just so you get an idea. This happens in other companies, Warrior Met Coal, metallurgical coal, not thermal. In the last 3 months it went from 50, now it's at 64.79. If we look at the highs, metallurgical coal, thermal coal, it reached 600. Then for metallurgical coal, look here too, it was at 300, 300 something, and now it's at 200. So I think these have run way ahead of their fundamentals because of sentiment. And then we see others in the same business whose revaluation, even though it seems we've passed the bottom of the cycle, hasn't been as high. So, well, you have to be careful. For me, with the valuations we're seeing in this sector, even though I buy into the narrative that data centers are obviously a positive development for the demand for this type of energy, the valuations are starting to get a bit stretched.
All right.
Alberto, no, Alberto, sorry, Benton is asking again about the Spanish stock market. I was taking a look at Nextil, a company in the sector, mainly producing fabric and such. I don't know what happened to the company, Benton. I don't know if it's in the middle of a round, but I saw that their revenues have dropped a lot. I don't know if you can check it for a moment. The ticker is NX.
NXT new textile expression, right?
Yeah.
They were looking for textiles and I couldn't find them. Well, in terms of price, it's doing quite well. It seems like it's turned around, etc. Obviously, it's not a big company by any means. Fundamentally, yes, at least from a fundamental point of view, we should fully understand what he has brought to the company. In fact, we can ask Warren too, because what you're saying doesn't make sense, this change in fundamentals. Now,
Right. What I don't understand, Benin, is that drop in revenue, because in 2018 they were making 75 million, and that hasn't been reflected in the stock price, because in the end it even kept growing. I don't know if it was a loss of contracts or what exactly happened to the company. If you could give a bit more context.
Well, while V and Warren give us some context and see if they can hit the nail on the head, also remember what I said at the beginning, with the code LW and the link in the video description, or in the audio if you're listening to us on iVox, Spotify, etc. You have a 15% discount code for Investing Pro, which is the platform you're seeing here, the one we use to check data and so on. Sorry for the interruption.
here it also explains what you were saying about the restructuring, Miguel.
It's strange, 2.2 in revenue, same as profit, don't have Cox.
Yeah, we have to take a closer look at it. Yeah,
We'd have to study it. We'd really need to dig in deeper right now. What do you all think? Let's keep going. Look, Eduardo Perez, what do you think about ATS? Eduardo mentioned it earlier at the beginning. I'm not sure if you were here, but hey, it's not bad to see it. Maybe you could explain why it's been going up these past few days.
Yeah, there are several factors here, not just one.
you can see it's gone up from the lows it hit less than a month ago, now at 36, and today it's hitting new all-time highs, now at 66. So, what happened? Well, the doubts that existed were about the company's launch schedule because they had said they would launch several satellites starting in June, and that would allow them to deploy a fleet at scale and provide service, which really requires at least a minimum infrastructure to deliver. So, well, this has been delayed partly because of them at first, but then also partly because of their launch partners, which in this case with the Indian Space Agency. And it seems that this has now been resolved, that now they're finally starting to pick up the pace, and that they've already shipped the first satellites to be launched in 10 days, right, in India. So when they announced yesterday, the stock went up a lot. We see it was around 47, 48, and it closed yesterday at 56. A nice jump. What happened today? First, they did a call test in Canada that worked really well, showing off the technology. They continued to build on the momentum from yesterday. Today, the president also spoke at an analyst conference, which helped clear up some doubts. I saw the transcript, but I still need to finish watching it properly. And then there are also a lot of rumors that they're about to announce a final deal, a definitive agreement with Verizon, so now all the good news has come together in 1 week. We went almost a month with nothing, and suddenly everything's been resolved in just a few days.
This is a company where the market.
Antonio, maybe you can also talk a bit about options while you comment on this.
Yes. Look, actually, we can share here. More than once we've talked about how we've played STS. Look, right now I don't have any, but if you want.
Antonio, while you're looking for it, I'll give you my opinion because this is a company I do follow. What I always tell you is, like Albert always says, in the end I think the key here is to manage your portfolio well and really understand the weight you're giving to each position. That's what I believe. And also to understand that what Albert always mentions is becoming less and less relevant, that it's less and less of a binary outcome. I mean, zero is getting harder to reach because of things like the satellites, as we saw with Elon Musk. But what I always say is, If I think about it as if I owned 100% of the company for 10 years, a 3-month delay in launches really wouldn't matter that much. In the end, it shows up in the stock price, but it doesn't affect the fundamentals of the company in the same way. So I think we're going to keep seeing a lot of volatility with any little piece of news, but in the long run, I still think it's a very interesting option.
Here's the question that options investors need to ask themselves. Okay, and I'm going to throw it to Albert. I have shares of ASTS. It's going up 15% in a day, after already rising 8% plus 15% and so on. Should I sell some calls, or in a company that can be so explosive? Not a pun. Could that be a bad move?
You want me to answer that, Antonio?
Your opinion. What do you think?
My opinion, you should do it. Obviously, this isn't a recommendation, but that's what I do and would do. Why? Well, it makes sense to sell, especially your whole position. For me, not really. We're here because we see huge potential and asymmetry. But when something has gone up over 20 or 30% in 2 days, and you have a binary risk event on October 12th,
It's not a 50-50 binary event, not necessarily equal probability, but you have a risk event. De-risk your position, especially when implied volatility is so high, because returns on these short-term calls are crazy. Antonio, show it.
I'm showing it. No, you can't see it. Yes.
yes, but I'm just mentioning it so people know.
Sorry. Yes, exactly. This is the million-dollar question. So, what is Albert saying? If you have, for example, I'm just making this up, 500 shares, and you have good performance. Albert talked about this company on Locos the Wall Street. I don't want to be wrong, at 20 or below, and when.
It went up.
And what is the average price in the model portfolio?
Could be 21.
22. Something like that rings a bell. Suppose you have 500 shares. Well, what is Albert saying? Hey, don't sell the 5 calls, okay? But for example, if we look, notice that if we don't go to OPX, which are the main ones, in the third week we don't have any strike open above 68. This is a sign that even the market makers were caught off guard by this explosive rally. But if you go, for example, to November 21st, 51 days out, hey, sell the 75 at 50%. Well, look, that's $2,265 if you sell 3 contracts. Each contract brings in $745. We can do it. We can do it. Here you add. I think in the example I said you had 500 shares, so you just put 500 here and this is how it would look. So, well, notice that the upside isn't a straight vertical line because we have those 3 call sales, but we don't lose 100% of the upside. And if we take a cautious approach by setting aside some cash, that could be a good idea because, in the end, even though we talk about the model portfolio and when we talk about options to seek returns, I think the main merit is always caution. And you see, there have been long periods where a message of caution is needed. Look, even now with everything at all-time highs, we need another one of your leader-type messages. Another little talk saying, hey, we're at all-time highs. Be careful with getting carried away.
Yeah,
It's about time.
the wet blanket, as they say in the United States, or in English, basically the party pooper of ETCA, but that's just the truth. I mean, it's easy to think you're the best when everything is going up right now. You buy something, any kind of quantum computing junk, whatever, and it gets these huge, massive valuations, and it's easy to believe, or at least to think, that everything, even if STS goes well and meets all our expectations, that it was inevitable, and so on. But risk management is really important, and that's what will actually allow you to build real wealth and achieve spectacular returns in the long run. So I'll send out another message of caution precisely because of that, because it's easy to get carried away, to leverage yourself at the worst possible moment, to go overboard with puts, and so on. So, well, even if I have to play that slightly annoying role, I think it's necessary to help people learn about portfolio management too.
Hey, actually, Albert's not going to say it, but I will. That's actually one of the things I like most about Albert as the leader of a community with over 1,000 people and all that. When we're at all-time highs, he sends out an official message that sounds like the King's speech, an audio, like 10 minutes long, saying, "Hey guys, take it easy," and so on. But when it was Liberation Day, he said, "Hey, if you have cash, hey, don't sell in a panic. This will pass." You were really optimistic there. And damn, who would have thought back in April that we'd end up like this? Or that we'd be where we are now at this point?
Yeah, the mood always swings a lot, going from optimism to desperation and so on, especially with more volatile companies like the ones we often cover. Even though we have a more barbell approach in some calmer parts, it's just inevitable.
So, well, I think the psychology of having company and a bit of guidance also helps.
Miguel, before you go on with the next one, just a quick thing. Give me 30 seconds, please. There's one here that, every time I read it, gives me a bit of a headache, which is iron. I don't know if iron is a stock we've missed or one that's about to take off. You keep following it, right, Miguel?
I don't know which one it is.
I do. In fact, if you remember, we talked about it in 2023, between 5 and 7, letting it go up to 47. That's not true, but because of the Bitcoin side of things. In the end, it took off for a different reason, more on the data side, just like core, etc. So, I'm very skeptical about the return this capex is going to have, but it's definitely taking off like a rocket.
Miguel, go ahead.
Yes, going back to last week's consumption, Fairtree's opinion, molten cores, which you mentioned in the other Q&A, has almost 10%. Thank you.
Yes, I like it, and I think it also has exclusive distribution in the United States. The FEVR.L, well, as you all know, for me it's the most premium tonic out there, a really great product. The thing is, the valuation was so demanding coming out of 2021 that, well, it just didn't make any sense. In fact, let's project it here, but
Sorry, let me pull this up.
here we have FEVR.L, okay? If you look at the last 5 years, well, it was trading at 20, this is in pence, and now it's trading at 8. The fundamentals are good, meaning this is a company that has executed well. So what's the issue? It was coming from unrealistic valuations, right? We can see here that growth slowed down a bit, but it's still a very good growth rate. If we look at this chart, it's incredible. It's the same story with profits. Where has it had more problems? Well, with some inflation issues, and the starting valuation didn't help, etc. And we can see that in other metrics, it hasn't been able to carry this over. So, as a product, I love it. I think it makes sense. After the drop, the valuation is starting to get a bit more reasonable, but for me, it's still somewhat demanding. Let's see what they're comparing it to here. With Suntory, that's fine, parts of Coca-Cola, etc. So they're telling us that now this would still be trading at a premium because its profits are depressed, but still each. But if we look at where it came from, it's absolutely incredible. So I like the product, but profits have taken a hit because of inflation and not being able to pass it on, and I don't like the valuation.
Before we move on to another one, hey, just a quick note. You'll also find in the video description a short 20-minute video we've recorded. in our studio with good quality and all that, where we've put together a list of mistakes to avoid. Mistakes that, if I were to start investing again now, going back 15 years, I've realized were actually errors. It's available for you in the video description, and if you want to check it out, well, there it is. Mistakes to avoid when investing. We've left it there so you can enjoy it too. Look at this one. Yes, I was just about to get to that one, which is actually a question from Ricardoras where he talks about Brookfield and Georgia Capital. We always say that Georgia Capital's discount compared to Seoul makes sense given the country risk in general. What do you think? The Brookfield sale.
But Ricardo, no. I mean, I understand what I understand it to be.
Brookfield. I don't know if it's another company.
But Brookfield's discount is not that high. It's a completely normal discount for a holding company, 15 to 20% if I remember correctly. I don't know what Albert thinks, but
Yes, here you have the difficulty of knowing the assets, and the fact that in a holding company, even if you add up the stakes, add up the value, and it's worth X. Since you don't have control, this will always have a discount, as Miguel says. So it's reasonable. Less than 10% is very rare in a holding company.
I think, if I remember correctly, one of the only ones that didn't have a discount on NAV was Berkshire, because precisely when the NAV dropped, they would buy back shares like crazy. Of course, but I don't know of any other holding company above that. Well, if you can consider MicroStrategy, which for me, though people might want to kill me for saying this, my opinion is that I think that it's long Bitcoin, short the tech.
There are people who think the opposite. I'm more on your team. All right, let's go with another one, Miguel.
Hi, good morning. Do you think quantum computing will take off as much as AI? What do you think? Well, Albert.
That's still very far off for me, technically speaking. And then you look at the valuations this has. For example, this company, which is pretty much a paradigm case, you see how much it's gone up, and in reality, it doesn't have any revenue, nor isn't expected to, not by a long shot. We don't see this making 10 million in revenue, and the market cap it has now, let's check it out, but it's going to surprise you. For 7 million in revenue, let's see if the market cap comes up. If you see it around here, let me know. Here it is, market cap 9 billion. Wow.
Several times over, right?
Yeah, that's what it is. It's trendy, it's fine in this euphoric market phase, a bit like 2021, but honestly, this makes no fundamental sense, and it's years away from getting there.
So, well, to me it makes no sense. But hey, congrats to anyone who took advantage of it, obviously, right? In the end, we're here to win, exactly, and congrats to those who spot these trends and make the most of them too.
Let's move on to calmer topics. Water treatment companies, mining companies. Pete is asking what we think about the rise in commodity and critical metal prices, and whether they'll be heavily affected. For example, BQE Water. I didn't know about it.
I mean, I don't know the company, but I like the idea. In fact, even in shale and so on, they're having a lot of water management issues. And in mining, data centers, etc. as well. So it's something I'm interested in, so I'll make a note to look into it. We're actually taking this idea from you guys in this case.
Albert, we continue with the Spanish Stock Exchange. Eduardo Escudero talking about Presa Española, Vidrala.
I quite like both the trend of the product, let's say, and the fact that it's an oligopoly, so to speak. Wait, I put the wrong one. I wanted to put the BMA one. That's a little steep for me too. In 2022, when it suffered from such massive cost inflation, it became a little more reasonable.
Man, Vidrala was at 90. That's how I remembered it. 50 something.
Its quality, it's good, just a bit more expensive. As we said, Veralia, I like the product, industry, and trend, but it seems a bit pricey. If we face another round of raw material inflation, which is possible if the economy picks up, runs hot, margins took a hit in 2022. Here you can see, well, you can't really see the dip in margins, but if you look at the revenue, you can see what the margins should have been, but weren't, so to speak.
Now it has a margin, a 55% gross profit margin. But that's exactly what you're saying. If we go back to an inflationary scenario with higher costs for raw materials and energy, this is the kind of company that could really take a hit. Cardboard box Plux. Yeah, he also made another comment saying it was a bargain. This is a company that sounds really familiar to me, but right now I couldn't tell you for sure.
Is it the one with the restaurant cards and all that?
Yeah, etc. All right.
Familiar.
Okay.
I don't know if it's cheap or expensive right now. Honestly, I couldn't tell you about that. From a fundamentals perspective, I see that it makes sense, but we have to look at its valuation. I know the product, I like it, and like I said, we need to take a closer look at its valuation. We can make a note of it if you want, and discuss it in the next one too. All right, let's go.
With the last one, Miguel, Big Bear.
Big Bear, artificial intelligence of the future.
We get asked about this one a lot. BitBear is Sanhedrin Consultorio. Sanhedrin Consultorio is a company that I think Reddit has really hyped up. I think it made the chart. If you show it now, you'll see what it did EST. I have it. I can share it here too, but I don't really keep track of it.
Me neither. I know.
You really like.
Very, very extremely volatile companies.
Yeah, it's a company that if you look at it this year, well, it had a drop there. You can see my screen, right? Yes. And now it's gone up, even though it seems like it's up 45% just this month. Yeah. Well, no, we can't really give you an answer here. And now, the very last bonus, for real this time. For the more cautious investors, what's the closest thing to a fixed term deposit? You know which one, right? I understand what you mean. No, or PetroTAL.
He was talking about the Bitcoin mining company that's a partner of NVIDIA, the one he mentioned. No.
No. That comment was from before, about Iran. I said, for the more cautious investors, what's the closest thing to a fixed term deposit? I'm not sure if you're referring to TAL Education Group, which I think you are. Well, it's a company. Look, well, it's a company. Damn, in 5 years it's had a significant drop and I've had something to do with it. I'm not sure if you mean because of dividends. Ah, PetroTAL. Okay, got it. Like I said before, it must be PetroTAL.
Right? No, I used to follow it a while back when they had those jurisdictional issues, right?
Because, as you know, even if you don't care where it's listed, where it operates, which is in Peru, it had a lot of social problems, unrest, and so on, and that's when you got quite a discount. I haven't followed it since then, since 2022, but we'll make a note of it. I'm not super bullish, as you know, on oil doing really well in the short term, but there are some really cheap things out there, so one thing can make up for the other.
Very well. Well, guys, that's all the questions answered. Sorry if any are coming in right now. As I always say, You can leave them in the comments on the YouTube channel. If you're research subscribers, you already know that on Discord, Albert somehow manages to answer everything, even though there are over 1,000 minds thinking about which stock to buy, which stock might go up, and so on. And well, through any channel you prefer. Remember that in the video description you have a link available if you want to get that 15% off on Investing Pro, the platform we've been using throughout tonight. And now on Sunday we have a Sanhedrin. Edgar is back. He's not on a flight this time, and I'm sure he'll bring us some fascinating topics. Albert, Miguel, thank you both so much.
That's it. See you next week. Thank you very
much. So you know, next week we'll have another Q&A session. We'll let you know if it's on Wednesday or Thursday. And as I always say, thank you all so much for being with us. Hope you have a great rest of the week. A big hug. See you on Sunday. Bye.